everybody. Welcome to another episode of 10,000 Roads to Financial Independence. And today I have Michael Elefante. Michael is a real estate investor and content creator. Currently, he has 4 short-term rentals that cash flow over $30,000 per month, and 1 more under contract and close soon. 1 long-term rental as well. So Michael has reached his financial independence through this short-term rental venture, and he's currently passionate about teaching others how to successfully implement what he has done with his short-term rental and reaching financial independence as well. Welcome to our show today, Michael.
Yeah, thanks so much for having me. I'm excited for our conversation. It should be a good one.
Yeah, so we were just kind of talking about this before, and Michael and I, just a fun fact, are both in our Airbnb right now, traveling. So the lifestyle of people who reach financial independence. Michael, we always ask our guests this question, just kind of anchor the show. When you're thinking back in your childhood upbringing, what are incidents, and what is the one incident or person that you feel like impact the entrepreneur who you are, shaping the entrepreneur who you are today?
Yeah, I think there's kind of 2 answers to that for me. One would be my parents, just more along the lines of, getting out what you put in. And they both work very hard and diligently and smart. My dad's actually a financial advisor. So it's actually interesting when I first started investing into real estate, and he's a little bit more traditional as far as his investments are concerned, but he still, runs his own business and has grown that over time. My mom has been a nurse for, going on 30 plus years now.
Wow.
So yeah, just kind of having that, within the household and reaping what you sow, per se. And then the other thing is just through my interest in books and YouTube. And that has grown more later in my life, actually, but that has played a huge impact as far as understanding what financial freedom means to me and my wife. And that kind of what leapfrogged us into our real estate journey.
Mm-hmm. So kind of the question I have over here is that, did you had a traditional jobs before you kind of got into, the mindset of FI? Like, how did that all happen to you?
Yeah. And it's probably a good thing I had jobs that I didn't really enjoy, or else I wouldn't have put so much pressure on myself to find ways to reach, financial independence at a younger age. So after I left college, which I played baseball through college, so I was hoping to play professionally, battled some injuries. It just wasn't meant to be. So I actually was going back for a 5th year because I redshirted a year. And between that graduation year and my 5th year, I didn't know what to do. Like, should I go back and play baseball more? Should I just go join the workforce? So I was actually training part-time, and I was working. The only company or place that would hire me in Florida during that summer was Dunkin' Donuts. So I was literally pouring coffees for money. That was my job. And I was like, man, that was like my first lick of, I need to find ways to make money passively. But beyond that, played baseball 1 more year. And my first job out of school, along with several years after that, was technology sales. So I started the bottom of the food chain, just like very old school company, pound the phones, 75 to 100 cold calls a day.
Wow.
Just absolute brain hammer. And I was like, I can't do that. I drive home almost in tears. I'm like, I can't do this my whole life. Yeah. So my role, my mindset from there was, I know I need to invest. At that time, I didn't really understand or know about short-term rentals or real estate yet. I just knew I needed to save money and learn how to invest it. Mm-hmm. So from there is, how do I boost my income? I side hustled. I worked on the weekends. I worked at a vineyard in Dallas, Texas for a while, applied to jobs, networked my butt off, and bounced around between tech sales jobs, ultimately to field sales role, which is where I was able to generate, very high level of income, more than I thought I'd probably deserve, but worked hard for it. And then I just invested as much as I could. And that's where it was.
That's awesome. And how did you first started to think about like, hey, I got to invest? For some people, it's kind of like, oh, I'm just going to get more jobs and more jobs and more jobs. And yeah, really kind of trading the hour for money. But like, how did you kind of thought about like, hey, I actually need to invest?
Yeah. So I remember, it's funny, I got into podcasts. I drive to work, and then after work, I would drive 45 minutes north of Dallas to a vineyard on the evenings on Thursday and Fridays. And then I would work all day Saturday and Sunday.
Wow.
And it was great because I'm like, wow, I'm making more after taxes at my job, cutting cheese and pouring wine, than I am before taxes at my day job. This is a very entry level role. Right. And I was like, oh, this is great. If I could just do both and spend so much time, then I'm like, I got so burnt out. Mm-hmm. And I'm like, then I started listening to podcasts, as I mentioned. And one of them was called Smart Passive Income, and a great podcast. And I didn't really understand what the gentleman who created that podcast meant by Smart Passive Income. I listened to a ton of his podcasts. Didn't really click for me until years later, but that's what piqued my interest in creating alternative ways to earn money that weren't tied to the time you put in, their exponential growth potential. And then I got into Robert Kiyosaki, Rich Dad Poor Dad, Cash Flow Quadrant, all that. And that's when my eyes started to begin to open up.
Yeah, that's awesome. So that's awesome because that's a pretty young age to kind of get into building your nest egg per se. I hate to use that word, but that kind of stuff, and then kind of building in the incomes. So how did you decide it? So you made all these money. Like, one question I had before is like, what are some of the habits you had kind of kept you going? Because it sounds like you're just driving yourself really hard. A lot of people during that age, they probably had a great time during life when they made money and et cetera and spent it. So how did you kind of keep yourself going? Because you mentioned a little bit about the burnouts, and so how do you actually kind of deal with it and going back to pretty grueling, working conditions?
So I think I fell into the trap of lifestyle creep pretty quickly at a young age, and I wasn't even making that much money. It was once I figured out I could pay for my dream truck, I went out and bought it, and I barely qualified for the loan. And I remember my dad actually lent me money for the portion of the amount of the truck that I couldn't actually qualify for. And he lent it to traditional loan to me. So I paid him back with interest every single month. So I was like, man, I can afford this if I work so hard. And then I started to read more books, right? With Cash Flow Quadrant, that was the book that really turned my world upside down. And instead of trading time for money to pay for the liabilities of my life, like the cash flow is coming in and going straight out the door. So for me, it was, I need to take that money and invest it into assets that produce monthly cash flow, i.e. real estate, that can pay for the liabilities of my life. Then you hear people like Brandon Turner, I remember seeing him buy a Tesla, but his thing was, I bought an investment property and the monthly cash flow pays for my lease on my Tesla. And I was like, that's cool. So you can all of a sudden have all these different properties or different income streams to pay for all the crazy stuff in your life. That makes sense to me. And then you eventually could leave my job and whatnot. But that was like kind of the mindset I grew and developed over those few years when I made some mistakes, obviously buying that truck, which, funny story, I sold that truck in order to have enough money to furnish my first Airbnb.
Wow. That's awesome. That's good. That's good. At least it's kind of kept into good use. That's awesome. So tell us a little bit about, how did you start with Airbnb? Like, what is that exploration process like before you decided this is the direction I want to go? Because it can be really confusing. There's so many resources, there's so many asset types to invest in. Oftentimes we hear investors talk about, well, which one should I be going into?
Right.
So
and I looked at a lot. I looked at wholesaling. Again, I was younger. I really didn't understand the concept of wholesaling, right? Assigning contracts to people. That just did not make sense to me. So I was like, I'm not doing that.
I still don't understand it. But
I understand it, but I understand it. It's a lot of hard work. And that's to me as a job. You can build, you can automate stuff, but at the end of the day, you're still working really hard. You can make buku money in wholesaling, but not for me, at least not right now. I like the passive stuff. So started to look at the traditional stuff. I'm like, it seems really simple to do a duplex, maybe house hack. My wife didn't want to do that. So I was like, that's out the door. Single family, duplex, small multifamily, and $200 a door, the typical bigger pockets thing. And I'm like doing the math in my head. How much money do I need to get traditional financing at 20% down-ish to get $200 a door? How many times do I have to do that before I could leave my job? And all of a sudden I'm thinking, this is a long ways away. And I know, you can go slowly and build and build and build. But then I learned about short-term rentals when I moved to Nashville, Tennessee, and I took a new job there. And my neighbor worked for a property management company, and she was telling me about how much they're charging per night. So in my mind, I started to do the math, and I just built an investment analysis calculator. And I said, if these numbers are real, and now there's data out there like AirDNA where you can go look at occupancy and average daily rates and things like that, then I'm seeing returns of like 25 to 100% cash on cash return on the properties that we've invested in. And instead of $200 a door, I'm talking thousands of dollars per door. And I was like, this is too good to be true. There's no way. So did more research, spoke with a realtor who understood short-term rentals, owned one himself, bought our first property and saw the cash flow. And at that point I was hooked and never went back. Cause I was like, literally one property can set you financially free, 1 to 2 properties.
Nice. That's awesome. Now so I understand that now you have like 4 properties and soon to be 5. How did you generate $30,000 out of that? Because when people running the cash on I know a lot of people run the Airbnb. We run some Airbnbs as well, but nowhere close to the cash flow amount money that you can actually achieve over there.
Yeah, so our properties most of them are larger. Our smallest one's a 2-bedroom, and then the rest are actually 4-bedroom properties. And 2 are in Nashville, 2 are in Gatlinburg, Tennessee, and the 5th one we're closing on is a 4-bedroom down here in Fort Lauderdale, Florida. But the thing I realized was you're basically operating as a micro hotel. That's how you have to look at it. It's not, what if nobody rents it? Is like you look at vacancy, right? Like, what if no one rents it? Oh my gosh. You look at the occupancy rates on AirDNA and you see the tourism growth in these different areas. And if I'm occupied for, let's say, 60 or 65% of the time, and my average rate is $500 a night, which is not unreasonable for a 3 or 4-bedroom house in Nashville, then you could do the math pretty quickly and be like, oh my gosh, I can generate $100,000 to $150,000 a year in revenue. And my expenses aren't that much more outside of cleaning costs and utility bills on top of my mortgage debt service. So just understanding the numbers made me realize, it was like very eye-opening at the level of cash flow that they can bring in. So the other cool thing that I wanted to mention, because I know a lot of your listeners are probably thinking of the cost barrier of entry, right? Like, Michael, you have these larger properties, housing is skyrocketed. Obviously that could reduce the cash on cash return. What if I don't have enough money to do that? So the cool thing about Airbnb is you could do a thing called rental arbitrage, where basically you act as a corporate housing company. You set up an LLC and then you rent on a corporate lease agreement. So all you really have to come out of pocket on is furniture. So you could start smaller, but the cash flow is so much greater. And the cash on cash return there is substantial because you're paying rent. You don't have to fork up a down payment, if that makes sense. And then lastly, you could co-host, which I thought was fascinating, manage somebody else's Airbnb for them and take a profit share, take a cut of the revenue. So I was like, that was what was fascinating for me as far as scaling. There's ways to get started, but that takes way more creative financing in the long-term rental world, doing hard money and all that versus the Airbnb model.
Yeah, definitely. Now that there's so many models that you have talked about. So have you done co-hosting for folks, and how would you say like the right way to kind of structure that? Because on the receiving end, I've done co-hosting with people. I'm not the host, I'm the one providing housing. So my co-hosts always like to do a revenue-based share. I've also done profit share as well. Try to figure out like what's the best way to encourage profit-driven operators.
I encourage people to do a percentage of revenue, top line revenue, just because that's how most property managers operate in the short-term rental space. And I mean, traditional property managers for vacation rentals charge 25 to 40% of revenue, which is a hefty amount. So I think it's a really unique opportunity for someone to come in and leverage technology tools. Like, you don't have to be there at an office handing out keys to guests. Now you can automate the messaging, you can automate the lock codes, everything. And it doesn't take much effort to do it. And maybe you charge 10 or 15% for starting out, or even offer to do it for free for a month to earn someone's trust. And then you could work your way up once you have a resume of co-hosting. And like that can add up really quickly. And again, it takes no money out of your pocket. And then there's 2 ways you could do it. You can actually do your co-host fee directly through Airbnb. You can set up your profile, and the owner of the property can add you as a co-host. And they can opt to have you just take your revenue cut directly from Airbnb. Or what a lot of people opt to do is have just a property management agreement drawn up between you and the owner. And then you take all the revenue and then you cut them a check at the end of every month with a little report. So there's different ways you can go about it.
Gotcha. That's awesome. Now, do you have kind of like some top tips that you can share with people who's kind of looking into this to see if it's actually a right fit for them to be either a co-host or hosting for the Airbnb, it kind of basically investing into this? What are some like good tips on like if they're a right fit?
Yeah, I think first and foremost, I tell people, if you're interested in Airbnb in general, don't ask how much money do I need to start? How much money do you have? And then pick a strategy. That's what I always tell people, because if you have no money, I would encourage you to try to network and get a co-host deal. In the meantime, side hustle, try to boost your income to save up for your first arbitrage deal. So save up enough furniture for a 1 to 2 bedroom place, and then go from there. Then you continue to build your cash flow, right? It compounds. But if you have a decent chunk of money, then you could focus on buy and hold if you want our multiple arbitrage deals. So really, how much do you have to start? And then you could select the strategy to start with.
Yeah, I love that. And would you ever recommend people, because it's you almost kind of make that level really clear, articulated, that the different level based on what the money that you have. But do you ever kind of recommend people actually buying the property and just do that? Is that like the ultimate goal So essentially
think
there's,
so. For,
equity.
yeah, for me, yeah, like yourself, right? You like the equity over time. Even when I started buying real estate with my wife 2 years ago, people were saying, real estate is high right now. It's too expensive, seller's market. And now that looks like pennies compared to what everything's going for now. It's crazy. So in my mind, it's like with inflation and current supply and demand in today's housing market, I don't have a crystal ball, but I don't foresee the housing market to pull back or crash in the next 6 to 12 months. It's likely to increase. At least most indicators I see point in that direction. I could be completely wrong. But I like that equity over time. Somebody else will pay the house off for you, and you capture that appreciation, which over the course of the long term tends to go up. Now, the coolest part about that, which you've probably talked to your listeners before about, is leveraging that equity in the future to acquire more real estate. So you could do a cash out refinance, which is a tax-free event where you pull equity out and then repurpose it to a new investment or do a HELOC. So there's a lot of neat things you can do through that strategy. Now with the arbitrage, one of the beauty things of that is you could scale much faster because it doesn't take as much to get into a new property. And I know people online that are, millionaires and they don't own a single property. So it's really just, how do you want to go about it? And, if you think the housing market's going to crash, then I would probably say I would be more comfortable if I were you in that mindset to do arbitrage, because you kind of hedge your risk against, foreclosing on a property if anything were to go that sideways.
Yeah, definitely. So you mentioned that you actually own a few different properties. Let's ask you a little bit about the property selection. You said you have like a mostly large properties, single family. You don't rent them by room, right? Like you kind of rent them as a whole set. And so why did you go with single family home versus a condo studio, 1 bedroom in an apartment building?
Yeah. So for me, it was the amount you could charge per night for number one. Number two, and you guys can go on AirDNA and look at this, but you can look at any market and see the active number of rentals or listings out there. And you can see how many studios, 1, 2, 3, 4, and 5+ bedroom properties are available to rent. And most markets, because the cost barrier to entry, taper off drastically. And there's more demand for smaller places, couples or single people traveling. But in some of these markets, or in many markets that are vacation markets or attract large groups, you can charge a substantial amount of money per night because it makes sense for a large group to split the cost of one big house versus going and buying or renting individual hotel rooms, because it's actually more affordable and more fun to go rent one cool place.
Definitely. And then, so in terms of a vacation, like, that type of, vacancy, I want to ask about the vacancy. Now, large units, what I noticed that, so in our portfolio, we do have our mom's house that we rented out, which is the 3 bedrooms. And then we have our, like a little Airbnb, which we only use it for our apartment building. So in terms of vacancy, we do notice that on the smaller units, we have fewer vacancy, and the larger units, we tend to have a prolonged vacancy. How do you kind of manage that? And then what's the kind of sweet spot so that when you're renting a larger property, you're still kind of profit so much more than the smaller projects?
Yeah, so that's a great point. And you're right. Typically, the smaller places have a higher occupancy rate, as I'll refer to it, in short-term rentals. But also it's market dependent as well, because if you're in a city where you maybe can capture business traffic and leisure travel, the smaller ones are going to make more sense. Where in Nashville, for example, we have the smaller place that since April or March of this year, it's been 95% occupied, like crazy. And our larger place, which does very well, is closer to 60% because we capture most of like the big groups that Thursday to Sunday travel, but we charge a 3x or 4x what we're charging during the week on that place on the weekends. Now, some places like traditional vacation spots, you could do 5 or 7 night minimums, like traditional beach houses. Those, maybe more seasonal, but they're booked 100% of the time from, let's call it May, all the way through the end of August or September. So it just depends if the seasonality can affect your overall occupancy throughout the year. But again, in markets like Fort Lauderdale, for example, the occupancy rate is really high across the board, even for 4 or 5 bedroom properties. It just depends on the market too.
Got it. That's awesome. And then do you have a kind of selection criteria when you're buying a property? What are some check boxes?
Yeah, this is actually a great question. I'm glad you asked. So there's a couple different things. First is location, critical, right? Because there needs to be tourism for you to capture reservations and bookings online.
Yeah.
And the next thing is proximity. And what I mean by proximity is proximity to local attractions. So if you're in a city, you may have to pay more. So you have to kind of weigh the benefit, right? And the ROI on spending more for a place that's really close and walkable to like the downtown attraction restaurants versus one that's a little further out. People have to pay to Uber in. And it all comes down to the ROI, but proximity, you're allowed to charge, or you're able to charge so much more because the demand, people want to be close, right? If you're beachfront property, lakefront, walkable, they want that convenience per se. The next thing for me is, I call it an X factor or wow factor. Basically, this like 1 to 3 key ways I can make this property stand out. Because what's unique about Airbnb is we live in such a digital age. It's all about click rate. It's no different than TikTok. Like what property is going to grab your attention and hold your attention for the longest in order to have somebody in the back of their mindset can see themselves staying there. So for me, how do I create a unique experience? Because you get that one photo and description to earn a click, and then you get 5 photos on the splash page. So if I can do that, I'm going to see, let's say I could put a mural like we did on a couple of our properties, an interactive mural, and bachelorettes go crazy for it because you're creating a memory for them. People will book one of our places because they get that photo. It's like wings and this is Nashville above it. Super cool. Yeah. Other ways are unique outdoor spaces like entertainment areas with cool lighting, like fire pits or hot tubs, amenities. They do go a long way in certain markets. And if you can stand out and make it more attractive, you can charge more per night and your occupancy rate is going to be higher. So that is really critical. And so those are like the first couple key things. And then furnishing it in a way and take professional photos to, again, attract a higher click rate. Because I'll call it the Airbnb life cycle. The more clicks you get, the more at-bats you get, the more attractive your photos and your place actually is to people, the more bookings you're going to get. Now, the more bookings you get, the more positive reviews you get, which is going to boost you in Airbnb search, inherently earning you more clicks and views. And this perpetuates over time and allows you to charge more further out in advance and get bookings further out in advance. So boost your revenue as well.
That's awesome. And then in terms of what do you think about luxury rentals? Because you go to Hawaii and then you see there are luxury rentals that probably like cost $25,000 a night or something like that. Like, what do you think about these places?
Yeah, I like really nice places. Borderline luxury. I think depending on the market, you're going to do extremely well. And even in economic downturns, I think people are still going to travel locally. They may not take luxurious vacations, but people who have like crazy money and in those types of locations will always spend it. And they want to spend it on luxury places. Like 10 grand a week or 20 grand a week is nothing to some people. It's kind of crazy, some of your listeners hearing that, but that's just the nature of the life, I guess. But I think like in Fort Lauderdale, for example, it's not unusual for a place to average $1,000 a night. Or they could rent somewhere on a month-to-month basis at 30 to 40,000 a month or higher. Wow. And these are like waterfront properties, 5-bedroom, very, very nice pools and all that. So I think it's a great opportunity. And I think what's even more unique, instead of buying one, is doing rental arbitrage on a luxury place. Because you could cash flow, $8,000 to $10,000 a month and only invest, let's call it 40 grand in furniture. Or if you buy it furnished, rent it furnished, then you're getting it for almost nothing. So it's pretty wild. There's so many different ways, which gets me like fired up talking about it. But the luxury things are really interesting. I wouldn't suggest starting with a luxury place, because your clients that you put in there may be a little bit more picky. So it's good to kind of adjust on the learning curve with maybe a smaller place to start out.
That's interesting. So I'm kind of saying this for some of our listeners, if you have beachfront houses, maybe getting a co-host and having that run for you, where you can kind of travel around the world, have that paying for your travel expenses, on the receiving side, that's also opportunities as well. Definitely. Okay, cool. Awesome. And so Michael, tell me a little bit about the course that we spoke about this a little bit more, because you're a wealth of knowledge in terms of when it comes to Airbnb. Sounds like there's a lot of data-driven decisions that you made as well, which I like. And so you mentioned about that you're doing a course right now to help other people as well. Tell us a little bit more about that.
Yeah, for sure. And I'll preface this with, I never thought I'd be a person to create a course per se, but I started just regurgitating what I was learning on YouTube a couple of years ago. And that's grew very slowly, but I had a lot of people reach out and I was taking free calls and I was just excited to share what I've learned and help other people. I had a lot of people saying, if you had a course, I would take it or buy it. So I was like, yeah, okay, whatever. And then fast forward to about a year ago in November of 2020, I started posting on TikTok, again, just regurgitating what I was learning, trying to funnel people to YouTube where I thought I provided the most value. But TikTok blew up for me. And I never thought of myself as a content creator, but more and more people started to reach out, got a little overwhelmed, and still more people, including my wife, encouraged me. But if you built a course, people will buy, get value from it, and you could make money. So it's like additional business model for me. So I finally spent several weeks, writing out the course, filming it, providing all my resources, whether it was custom resources or software that I use, doing demos. And I basically teach a step-by-step guide from the very beginning. If you're a novice or even already a real estate investor, but just don't know how to do short-term rentals, the entire process of acquiring the different business models, all the way through setting them up and then automating the management so you can self-manage without spending crazy hours a week. I mean, we work 1 to 2 hours a week on our Airbnbs, traveling full-time, managing 4 of them. So anybody can do this stuff. And I've had a lot of great feedback. I've helped people achieve crazy levels of cash flow, which is super rewarding, for me, more so than buying a course. So it's awesome to see other people succeed and then become that much more excited about it.
That's awesome. And then now switching gear a little bit on content generations and etc. What does it take for someone to kind of create a course or being a content generator, which essentially you have to pump out content consistently through the social medias and etc. So how do you kind of keep track of it? What is your process?
Yeah, I'm not as organized as I probably should be. But originally I was doing YouTube, which is a much more tiresome process. And similarly, a podcast, a little more tiresome. There's some ways you can automate it. I'm now outsourcing some of my video editing, but I had to get nicer equipment, lighting. With TikTok, I found it very easy, and it's the easiest platform to grow on. You could put out one video, your first video ever, and if it's a really quality video and gets a lot of traction, it could blow up. So I was like, that's interesting. So I just started posting. My first time at TikTok was once a day for a month minimum. And that was when I started to see some growth trends, and I just stuck with it for 3 to 5 times a week, typically. Nice. But yeah, it doesn't take much. I would say if you're passionate about anything, or if you're learning something, and you just want to share it with other people, it never hurts to start posting, because one, you'll never know who you meet. I've met several now really, really good friends through doing content and posting it online, which I thought was super cool, whether it's real estate related or other travel related. And the other thing is you never know what it would lead to. I never thought this would turn into a business for me, but now I have an S Corp and I have all these different streams of income that were born from pushing content. So it's almost like a pinch me moment, because I never thought it was possible. I never, had this in my vision or my goals 2 years ago even. So it's just crazy.
Yeah, that's awesome. And then that kind of touch on the marketing side too. So really the big kind of marketing lead generation for you is TikTok. YouTube, you mentioned, was really tiresome. We have a lot of videos on YouTube too. I agree. And what other things are you doing to kind of marketing things that you can share in terms of having your marketing being super awesome?
Yeah. I think I get a lot of feedback from people, and some people may hate this, but more 95% of it is positive feedback on the openness and transparency that I provide, because not a lot of people will go on and be completely open about their profit and loss and break it down in detail. So where I started to gain a lot of traction was just sharing with people screenshots of the revenue that we've generated. And I do this every month, actually. I'll call it a cash flow report. All of our expenses, the debt service, principal interest we pay on the loans, and ultimately what our cash flow is per month. And so I've done that for the past year and that's what a lot of people that kind of gets the hook. And then they see my other videos where I actually show tools that I use or strategies, or I'll walk through my investment analysis template, which I also have in my bio link for people to purchase for a small amount. If they don't want to take the course, but they just want one tool that I use, that's in there. So just ways to help other people. And I think people find value in the transparency and just openness to share information.
That's awesome. So what is from here? Because I think you're probably pretty young, unless if you're going to spa all the time, you look in your 20s and 30s. So there's a lot ahead. What is 5 years from here? Or what is a big goal that you kind of wanted to achieve long-term wise from here?
Yeah. So I think for me, the whole aspect of financial freedom was the time freedom. it was never necessarily about money, because initially when I left college, I was like, how do I make the most money possible? And I quickly hated it. Right. So, but when you achieve financial freedom, oftentimes it's done through investments and building businesses, and those grow into something that could produce like levels of income where you could do amazing things. Like I would love to start a family with my wife in the next year or two, and we would love in the next 5 years to build our dream home. So that's like personally a goal for us. We would love to do that. We would love to continue to travel. We've been traveling for the past 6 months in a van. We've traveled to like over 20 national parks. So that was on our bucket list. Finally got to do that.
Yeah.
We'd love to continue to scale all these businesses, including the short-term rentals, maybe some other real estate related investments to, we have stretch goals, right? Like $1 million a year would be as our next stretch goal in the next 2 years. And then on the business side, which again is growing way faster than I ever thought possible, is just continuing to be genuine in my content and helping other people, achieve great results, reach financial freedom. And in turn, I can also generate awesome passive income streams through there as well. So I don't really have numbers around those goals. It's just continue to be consistent and grow and put out good content and help other people. And I think I'm able to reap the benefits in return.
Yeah, that's super awesome. These are great, fantastic goals. And yeah, so I mean, and is there some goals to kind of give back as well? I guess the content creation is kind of giving back as well. So the 1 million a year goal, which is the big goal that you have, is mostly you basically put that 100% kind of generated from investments.
Yeah. So we have another goal next year to do 1 million between, which I think we'll hit actually, which I never thought was possible. I'm 28, I'll be 29 next month. So like when I was in college, I wanted to make 100 grand a year by age 30.
Yeah.
So just like thinking about this now is just like, it's just crazy. It's cool. It's, I don't know, humbling in a way, but giving back that's also part of our goals. My wife and I, give to charity that we, falls in line with our values or something that we're really passionate about. So we talk about that a lot is, how can we increase that each year as our wealth grows and our income grows? And we'd love to give back, just to something that we're passionate about.
Yeah, absolutely. That's awesome. Well, Michael, it's been a pleasure for me to interview you today. And there's like so much tips that I've kind of written down for the Airbnb stuff. And also definitely going to check out your TikTok channel now. I'm not really on TikTok. Maybe you convinced me that I should probably
You should be. You should. I'm telling you, it's crazy. It's not just dancing, kids, even though there is a lot of that.
Yeah.
You put out good content. People will love it. You could, share it. You probably get a bunch of people driven over to your podcast or TikTok that you'd be surprised with. It's just crazy. I can't believe the growth potential there. So I encourage you to do it. You would have a great page.
That's awesome. Thank you so much for the encouragement. Now, how does people find out about you and your courses as a follow-up to our show?
Yeah. So you can actually just go to my TikTok, YouTube, or Instagram. My TikTok and Instagram is Elefante6. And I have a link in my bio, and that has like all the information that I provide, like all my free and or paid for resources, as well as like products that I personally use that I like to share with other people. So if you guys want to check it out and send me a message on Instagram if you listen to this and found some value in it. I'd love to hear from you and say hello. Yeah,
that's awesome. So we're gonna put all the links below, and then also the links to Michael's course if you're very interested to kind of pick up the skill sets to run your Airbnb more efficiently if you already have one, as well as to launching your Airbnb strategy, because I truly believe that in our journey to FI, Airbnb is a really great vehicle for you to not need a lot to start doing the cash flow. And especially for all you listeners who are on the West Coast or New York, the property is very expensive to buy over there. So this perhaps is an alternative way to generate some more cash flow. And thank you so much today, Michael, for your time, and look forward to maybe invite you back for some webinars that we have as well.
Yeah, thanks so much for having me. It was a pleasure.
Awesome. So this wraps up another episode of 10,000 Roads to Financial Independence.